With equity prices up over 80% in almost 2 years' time, my next guest remains cautious about buying into this market. Mark Travis is the president and CEO of Intrepid Capital. Mark manages $1.3 billion worth of assets in 3 of his funds, one of which has outperformed 99% of its peers over the past 5 years. Mark, joining us from Jacksonville, Florida, which companies do you think are attractively priced now? I know you've got, what, a cash balance of 20%.
Well, Pimm, I think that the countercyclic nature of the Intrepid Capital process is to hopefully buy low and sell high. I think many people are hardwired at birth to do exact opposite. To me, if you look at the pricing on the Russell 2000, it's 18 times enterprise value to cash flow. You've got the volatility index down the mid-teens, and you've got the American Association of Individual Investors at a very interested level in terms of equity. And the last week after Christmas, you had your first net inflows into the equity market. So I'm, coupled with credit spreads have tightened a lot, and I also own fixed income. So I just want to be careful here. I like preserving what we've made for ourselves and shareholders. And like I like to remind people, the market's up 80% in the last roughly 24 months. I do have a couple ideas, though, that I think have merit. One is CSG International. They probably send you your cable TV bill. It's ticker CSGS. It's about a $650 million market cap. They've got about $90 million worth of free cash flow. And they really are the leading market share of billing for cable and satellite providers.
Why has a company like this not participated in the rally compared to other companies? Is it because of it's being a mid-cap name?
Well, even at that size, Pimm, I mean, the average Russell 2000 name's probably 750 million. It's 650 or actually below that. So I think that, whether we like to admit it or not, probably 85% of the buy side are index huggers. And, it's a small part of the index, and a lot of big fund families can't own a company the size of CSG. So that created an opportunity for us.
All right, talk about timber. I want to find out what your thoughts are having to do with trees and why that's related to your investment in Potlatch.
Well, Pimm, I think as long as, Helicopter Ben is at work with QE2, I got to believe it's going to show up in some point in prices. I noticed this morning on the tube that the prices of cotton, corn, soybean et al. Were up considerable in the last, year.
Yeah, well, indeed, cotton prices, they were up at the limits set by the ICE, the exchange, saying that 5 cents increase, that's the limit for the day.
Well, Pimm, I got to remind you, there is no inflation. I mean, if you don't need food or fuel, there's no inflation, right? So I think if the way we've done it with Potlatch, it's the biggest landowner in Idaho. They own 1.6 million acres of land. And if you look at what they do, they sell off about 250,000 acres a year. They sell that at highest and best use. If you value that land at $2,500 an acre and the rest of the land at $1,000 an acre, I think you get a conservative valuation around $40 a share. In the meantime, you're getting paid to wait with close to a 6% dividend. I know there'll be viewers that point out they're not covering their dividend, but I believe that's easily accommodated by the timber sales.
Now, I want to give you at least 30 seconds on Regis. I probably need the stock a lot more than you do. Tell me about Regis.
Well, I think we both do, Pimm. From where you're sitting, you can't probably see my solar panel, but one of their holdings is Hair Club for Men. And but they have 13,000 salons. It's a very simple business. I think management's really not done a great job of allocating capital. They bought back shares at 33. They issued a fair number in the low teens. And it generates $160 million in free cash flow and $1 billion market cap. So,
all right, I'm going to leave it there. I want to thank you, Mark Travis, Intrepid Capital Management, joining us from Jacksonville.